Quint.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live. The markets, it's been a fairly volatile day, but nonetheless, the fine print right now shows just a 0.25% dip on the index, 10,815, still above that mark. So for the time being, at least, we look stable. But we'll talk about the internals in just a few moments, running through the headlines. Border tension escalates after Pakistani aircraft violate Indian airspace, drop payload before retreating. India refutes Pakistan's claims of capturing an Indian fighter pilot. All civil flights are cancelled in North India. Indian markets trade with caution as investors await more clarity on Indo-Pak tensions. Indian Oil Corporation and HPCL win the maximum city gas licenses in the 10th round of bidding. And the RBI removes 3 banks from the prompt corrective action framework. Allahabad Bank, Corporation Bank and Dhanlakshmi banks exit the PCA. Good afternoon, Neeraj, and what a rollercoaster ride for today's session. I mean, from being up almost 1% to being down 0.5%, and then the recovery does come back in right now.
Yeah, this half looks very similar to what happened in trade yesterday, isn't it? Just that we were up in the session earlier today, which was not the case in trade yesterday. The news flow came in during market hours today. Having said that, not out of the woods as yet, but the Sensex posting showing a healthy picture right now, 34 odd points, and that's about it, getting ready to break into the green. Some glimpses already of doing that too. So, well, healthy, I must say, the market behavior right now. The currency should come up on your screen. It had deteriorated midway through trade. 71.30 was the intraday tick for the rupee, 71.31, so that continues to stay under pressure, and the bond yields at 7.46 continue to stay slightly elevated compared to what we've seen in the last few days, and I believe the yields are trading at the high point of the day as well. So that's the other bit. Just bring up the heat map. They now, of course, speak about all that's happening at the broader end of the spectrum, but the heat map should show you even Stevens really. No big cuts into any of the names. Wipro has been down throughout the morning session today. Nothing after that, so about 2.5%. The oil marketing companies are soft, so BPHP, obviously this whole trio has looked slightly wobbly today. So down in the session today as well. Amongst the heavyweights, HDFC Bank down about 1%. There is weakness in HDFC, which is down about 1% as well. So a couple of those names have looked weak. What has looked okay? UltraTech Cement, second day on a trot now, 2.5%. This is the best. This was amongst the best performing stocks yesterday and up another 2.5% today. Some gains for Bajaj Auto and Axis Bank, but broadly no key takeaways on news. It's essentially market sentiment, just that cement stocks by and large have looked strong and UltraTech exemplifying that strength. But what about the mid caps, Devina? How are they looking?
Well, slightly more better than the benchmark index, and in fact, right through this turbulent period in mid-afternoon session, the mid-cap index actually stayed afloat, so was up in the green and probably is thereabouts even currently. But individual stocks is something that you need to watch out for. You've got the 3 banks that move out of the PCA, which are gaining traction. Dhanlakshmi Bank 9.5%, Allahabad Bank 7.5%, and Corporation Bank to another 5.5%. So all these counters look extremely strong today. Cement, well, you're seeing concrete gains coming in about in the entire pack, and not just the southern based cement counters, which have got an upgrade from brokerage houses. Margin improvement is what they are saying. Ramco Cement, you've got Prism Cement, Orient Cement, following through with what some of the larger ones are doing in today's session. Other stocks on the back of heavy volumes that are gaining ground are the likes of a Minda Co-op that has traded a hefty amount, much higher than the last 20 days average, and the stock's up 7%. Linde India is trading 3 lakh shares and has got a gain of about 7%. Suzlon moves up 7.5%. A small penny stock, almost 6 odd rupees right now, but heavy volumes, 9 crore shares have already been traded on that one. Stocks approaching their 52-week low or trading somewhere around it. Naveen Fluorine down about 1.7% today. You've got IDBI Bank, not a heavy cut, just under 1%, but the stock is near its 52-week low. And RCF has been in and around its 52-week lows since quite some time now, and today too is no exception. It's down marginally though, about 0.1%. But it's the last day before we step into expiry tomorrow. Let's see how the rollovers have shaped up, because in the morning session and compared to yesterday's session, it was slightly lower. Agam, have they picked up?
Well, at this time, we are seeing, well, just with a slight bit of recovery when it comes to the Nifty, currently trading absolutely flat. When it comes to the rollovers, they will stand at around 42%, and rollovers certainly have picked up at this point in time. We're going to have to wait and watch for what the final number is, and it's a likelihood that could go above the mark of 45%. But the underlying is flat right now, as is the case for the Nifty Banking Index, which is down by as much as 0.3%. A significant addition in the March series, the rollover standing at 38%. Let's take a look at the India Volatility Index. This is where things may become, well, okay, so there you have it. It's not as high as the morning levels of about the mark of 19, but we certainly are seeing about 8.5% gains here, once again on the back of the gains that we saw yesterday already. In terms of open interest distribution and the kind of changes that we're seeing, we're essentially looking at writing at around the 10,800 put, but we're going to keep an eye on that one. And of course, India Cement stands out here with rollovers of 65%. Among a bunch of other stocks, we're also keeping an eye on several other counters, which also are moving in these markets. Case in point being Allahabad Bank is the other one, which is also seeing about 8% gains. And well, on the whole, it's certainly been a mixed day of trade. PC Jeweler also looking at, well, some gains coming through with 55% rollovers. And well, among many others, United Spirits also advancing in trade. So while it has been mixed, we have more gainers against losers, at least in certain pockets of the markets.
All right, Agam, thanks a lot for that. That's a quick F&O update that's coming in there. So Nifty rollovers have definitely picked up, but we'll have to wait and watch as to how much they go to by the end of the trading session as well. Remember, volatility peaked around 14.5% in intraday trade when you saw that steep cut coming mid-afternoon. From there, it stabilized a bit, 7.5% higher right now. Andrew Freris, CEO at Ecognosis Advisory, joins us right now on the show. Andrew, thanks very much for taking out the time. The first question obviously will have to be on the perception that you're getting sitting outside India with whatever is happening on the geopolitical front.
Three things. First, the equity markets have recovered quite significantly during January and February, and that was due primarily to the expectation that the Fed is stopped rising interest, increasing interest rates, and the 2- and the 10-year U.S. government bonds have also followed suit. Now, there is a problem with that, and the problem is that the yield curve in the United States has flattened, and that was never a good particular sign of the markets feeling comfortable. Gold prices have also increased, despite the fact that inflation, both in the European Union and in the United States, is not anywhere near where the central banks want it. And the economy of the United States and that of China, well, that of China is now potentially on a recovery mode, but the United States may very well have peaked, which means that if I look at the equity markets and the bond markets, I will feel very uncomfortable. And that's my second point. I will definitely not encourage my clients to go into equities. And as far as bonds is concerned, I feel more comfortable that we have seen the end of the increases in American interest rates, and therefore bond yields may continue to come down with prices going up. Uncomfortable, but there you have it. The Asian markets, year to date in US dollar terms, continue to be basically okay, except of course the Indian market. And the third and final point is the trade war between China and the United States. I call it trade war advisedly, and whether it is likely to finish or come to some kind of a conclusion. And frankly, I think by now there is a degree of indifference because the exporters and the importers are beginning to get used to the 10% increase in input duties, Trump says he's not going to increase duties up to 20% and bring in more goods. So if nothing spectacular comes out of the talks, I think we are in a kind of a neutral situation. I'm afraid it's not very exciting and not very sexy. I'm completely aware that what I'm telling you is boring, conventional, and not particularly incisive. But there you go. That's the real world for you.
Lots been happening here on Indian shores, but for an investor sitting outside India, looking at India right now, trying to decide whether or not to invest, is there any case in point that you would like to make that looks interesting or favorable for India to seek investments right now?
I'm afraid no. We had a budget which was clearly buying votes. And part of the deficit in the budget would be financed by effectively confiscating part of the capital of the central bank. Oh, dear me, that doesn't look very good at all. And the third part is, of course, the central bank is now completely under the thumb of the government. And in general, investors don't like that. And all that is at the eve of an election, which may very well see yet another this time not JP, but potentially Congress government coming back, but a coalition. And the coalitions in India can tend to be messy when it comes to significant restructuring of the economy. So until and when the elections are out of the way, we're talking about April and May, I would prefer to stay clear out of Indian assets. Well, we also now Pakistan, but this has been going on for a long time, although, mind you, it's an escalation of having actual military hardware being shot out of the sky.
So, Andrew, sorry, am I understanding this correctly? It is not an avoid the Indian markets for the time being for somebody who's sitting outside India?
Yes, it is avoid.
It is avoid, you're saying.
Avoid till the elections are out. I told you, I don't like the central bank under the control of the government. I don't like a budget which is clearly designed to buy votes and financed by confiscating part of the capital assets of the central bank. Unusual and very uncomfortable.
Now, these geopolitical tensions, Andrew, how likely are they to impact the money markets in a big way? The rupee, for example, today on this news of the escalation on the border has worsened a bit, currently trading at the lowest point of the day. What's your call on the rupee versus the dollar?
The rupee went up and then, they weakened and then strengthened, and it's likely to weaken. And until, as I said, the elections are out, I cannot see it strengthening.
Okay.
Despite the fact that the US dollar has lost now the advantage of potential increases in interest rates. Okay.
Okay.
And in other words, all assets are bundled, I'm afraid. And look, I'm not being gloomy and death-like over India. All I'm telling you is, until the elections are out, it will be unwise to go any big time into any Indian asset. We're talking about 2 months. We're not talking about 2 centuries, all right?
But you are saying that the bigger elephant in the room is the Indian election verdict and not what is happening currently across the border between India and Pakistan.
100%. 100%. Elections and not dogfights in the air.
Okay. Okay, interesting term. The next space would be if we look at the emerging market pack at large, while India is on an avoid list until a particular event goes, are you turning either bullish or bearish on any of these pockets? I mean, China is up about 20% from the recent lows. Actually, even the US markets have done that since the December 24th lows. What's your call on the EM pack at large?
Yeah. Well, let's take China. We are beginning to have some signs of a recovery in the economy. And January and February has been a very generous month as far as the central bank in China is concerned. In other words, there were specific instructions to the banking system to lend more to the private sector. There was clearly a decision to unwind the deleveraging process that has been on for 2 years. There was virtually an explosion of bank credit during February, all of which, of course, helps the stock market. But the stock market starts from an incredibly low base. Remember, China last year was just about the worst performing equity market in the total universe. I'm exaggerating a little bit, but not too much. So I'm seeing it from a low point. Now, if there is a satisfactory resolution with the trade discussions with the United States, then there will be something sexy, in inverted commas, if you pardon the expression, to look at China, a kind of a slow recovery, a looser monetary policy, and at least one of the clouds lifted out. So the answer is yes, I would look at that. And of course, Hong Kong also feels greatly relieved because of no further increases in American interest rates, because Hong Kong interest rates move in tandem with the United States, which means since year 17, they have been going up all the time.
What is the, the asset class at this juncture that draws most attention according to you? We've been seeing a lot of fluctuating pricing on various commodities as well, and your outlook on whether or not crude oil is going to be the big dampener going forward?
Well, in country, China always boosts the Aussie dollar and boosts commodity prices. So given that the signs are reasonably good on China, I'm afraid I still keep out of equities until and when, for example, the trade conversations with China and the United States are over. And I would prefer, let's say, to take reasoned debts on the Aussie dollar, for example, as a complete proxy to China. I'm not buying the Aussie dollar because I like Australia. I'm buying the Aussie dollar because of the recoveries in China. But for the rest of the assets, as I said, I would prefer to sit on cash, at least on the knowledge that the opportunity cost of doing that is not going to get worse by the United States cutting further interest rates.
Okay, Andrew, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Really appreciate your time.
It's always a pleasure. Thank you.
Andrew Freris, CEO at Ecognosis Advisory. He's not looking at India right now actively, but for him, the bigger call on the Indian markets would be elections and not necessarily what's happening right now. The markets seem to be digesting this very well too. 2 days on a trot now. We've had bouts of recovery from the lows of the day, and it almost seems like a very normal trading day.
Yeah, this could have been any day.
Any other day.
Any other day.
Yeah.
You know, despite the fact that volatility surged the way it did, but that's happened on previous occasions with no major cues to propel this kind of figure. Because just in December, I think, start of December, I think the VIX touched 20.4.
Yeah.
You know, so it's not as if this is a big mover for the markets.
Yeah, it's not. But well, let's stick with the topic at hand. And KV Kesavan, distinguished fellow at Observer Research Foundation, joins us right now on the phone line to talk about what's happening across the borders. And joining us on the conversation is Tamanna and Anand. Tamanna, over to you.
Yeah, thanks, Neeraj. It's been a very interesting morning with a lot of activity around the kind of skirmish we've seen between India and Pakistan over the line of control. KV Kesavan, let's begin by talking about what we know for sure. We know that there was an attempt by the Pakistani Air Force. They claim that this was done as sort of a preemptive strike, just to show that they have military capability but don't want any escalation. There's been no official word from India right now. Sources have told PTI that there was an attempt by the Pakistani Air Force and they were chased back. Where do you see the situation going next, Mr. Kesavan?
Well, I think the situation is going to be quite serious, and what Indians have done is also quite appropriate, because India has been waiting for too long a time with great patience, etc., etc. But I think Pakistanis have been violating, all norms. Therefore, I think there is a limit to India's patience also. Therefore, these actions came at the end of, almost our losing patience. Therefore, I think, but having said that, I think that exactly is going. I think it's going to be very tough. I think we should not allow situation beyond our managing abilities. Therefore, I think India, when it took its action...
Okay, you know, Mr. Kesavan, we don't have a very clear line with you, so we're going to ask them to call you back, and hopefully we can have a conversation with a clearer line. But, you know, Neeraj, coming back to the point I was making, and that there is so much information and misinformation out there. So it is very important, and here is a chance to tell our viewers that at BloombergQuint.com we're really making the effort to check and verify everything to make sure that the right information goes through. There is no doubt, though, that we've moved one step towards escalation. What happens from here now on is going to be very key to watch.
Yeah, no confirmations, I believe, even as of now. While we've gotten reports from PTI and ANI, I don't think we have official confirmation from any government spokesperson about what's happened at the border. I think...
just the fact that the airspaces have been shut, which is now pretty evident because all the airlines have made the official statement saying that they're...
That's absolutely correct. What we know for sure is that airspaces have been shut in certain parts in India and in Pakistan, which tells you that the situation, if you compare it to yesterday, is definitely different. That's what we know for sure. Where it could go from here on is something that, of course, we can leave to the experts. But it will be interesting to see now how we take it forward and what is the official response that comes in from India as well.
Okay, you know, the other question, and I'm wondering in the exchanges, and all three of us have spoken to multiple people. Speaking to Sanjay Pugalia today, and in the afternoon at about 12:30, 12:40, and I think the sense that we got was that the situation amongst the best of experts right now is of not knowing whether or not this will get taken to the next step, or whether this will get diffused at the current status, whatever the current status may be. Again, we're not quite qualifying what the current status is, but does it get escalated to a point from where it is right now to the next level, or does it get diffused? We don't know. As of now, we also know that Imran Khan is later to speak at some point of time, so we are on standby for that too.
Yeah, but you know, one interesting observation, because you know I've been speaking to experts since yesterday as well, and from the different positions taken today on our side and on the Pakistan side, both have left enough room to maneuver in it and de-escalate if the need be, which is very important going forward. For example, India says, as per sources, not officially, but PTI sources, so fairly reliable on most cases. Defense sources have told PTI that they did come in and we shoot them back, and no one from our Air Force, none of our planes were shot down by the Pakistanis. They don't have any of our pilots, which is what they are claiming. So we've left room for us not to escalate. It would have been different if we had said, yes, this has happened and we need to take it further. On the Pakistani side, they've also said that, you know, we didn't hit any targets. We could have, but we didn't. We just wanted to show that we could do this, and we do not want to escalate. Yeah, show of strength. So at least that's the right sound coming through right now. We'll have to wait and see where it goes. I think we'll have to have faith that governments realize what the costs are. You have to send a strong message, which we have. But, you know, definitely political compulsions should not play a part at all in such serious matters. Let's hope that happens.
Yeah, one certainly hopes for that too. Okay. Tamanna, thanks so much for joining in. Wish we would have gotten Mr. Kesavan on a clearer line, but nevertheless, sometimes you don't quite get that. Hey,
let me just use this opportunity to plug in. There will be definitely more in-depth analysis later on in the day on BloombergQuint.com. We will be doing a show on that, so do watch out for that as well.
All right, thanks a lot, Tamanna, for that. So that's a quick update on what's the current scenario like. For the markets, though, we've dipped slightly, just about 0.25% or so. I just want to quickly run through some of the bigger movers on the broader market space, which are doing relatively better compared to the benchmark index. The market breadth almost even keel, so no dramatic changes, at least on the advanced decline side. As you can see, a lot of crisscrosses post mid-afternoon. The start was extremely strong, and post mid-afternoon, you know, a little bit of a hodgepodge there, but finally now you're at an even keel for the market breadth. Gainers, Minda Corp 8% higher, Allahabad Bank 7.5% higher, Linde India 6.8% higher. So you do have gains which are substantial in the broader market. Lakshmi Vilas Bank 6% higher, Corporation Bank, Ramco Cements, IOB, the entire banking pocket. And if actually we could get the Nifty PSU Bank index, the PSU index rather, the PSU bank index, that will show you the strength that's there, though not at the highest point of the day, but this is clearly a stark outperformance to anything or any sector right now in the current scheme of things, up about almost 1%. Then you've got IRB Infra, India Cements, Intellect Design. These are the kind of gains that you're seeing in today's session. The bigger loser though, Max India, down about 12% in intraday trade on that stake sale of 51% in Max Bupa Life. Not happening at a decent enough value, and that's not going down to well with shareholders right now. 12% given up on volumes of 4.4 million shares. Moving on, the heightened tension is not good news for equities, and that's reflecting in the India Volatility Index, or the VIX. S. Kannan is here to take us through the details of what happened intraday and also the probability of what lies ahead, considering it's just one day to expiry.
So this India Volatility Index has recorded the largest change yesterday when we had that crack. But what is interesting is, we have seen some kind of cool off in the early mornings, when the Nifty bounced back, but that is short-lived, because of the so-called news that came in the later part of the day. So that again triggered a kind of an 8% change on the India Volatility Index. So this is coming on the second day of the highest recorded percentage change into 2019. So this phenomenon is actually, in finance is called volatility clustering. So this is a sign of large moves, following by the larger moves coming forward. So this is quite concerning. And if you remember, we had done this volatility piece sometime in the last month, where we kind of analyzed 2019 could be a volatile year, right? If you've seen that the median volatility for 2018 was 14, and currently with VIX quoting at 18, which is quite a substantial jump, it's almost 30% of what the median volatility for 2018 was. So having said that, if you see the rolls number, right, although it started on a weak note in the morning, it has a kind of slightly catching up, but the rollover cost, it's kind of indicating a positivity. So even yesterday we saw that the bottoms, the dips are being bought out. Even today we are seeing some kind of the dips are getting bought into. And if you see this, the rollover is like currently at 42%, which is quite normal, I would say, when compared to the 3 months average of 52. We need to see how the day ends up. But what is interesting is, if you see the roll cost, which is the average cost of rollover from one series to other series, is around 57 bips. This is actually more than what the average 3 months roll cost was, which is around 41 bips. So in essence, this kinds of indicates kind of long roll getting moved into,
and they're ready to pay that extra bit also to roll over the long.
Yes. So given this backdrop, I think these are an opportunity kind of someone to kind of move into on the long side of things, given that tomorrow is an expiry. But having said that, 10,800 level seems to be a very good support, and we have seen a huge call rating happening at 1100 as well yesterday. More than 4 lakh shares of calls have been done, and we have seen some blocks happening today at 1100 strikes as well. Largely, for tomorrow being an expiry day, so 10,800 to 1100 would be a larger range. But given the backdrop in VIX, so the volatility, high level of volatility are here to stay, because we have seen a regime shift that has happened. With some kind of positivity coming into play. So I believe that the blip what we have seen in the prices is short term, given that we are on the fag end of the expiry and at the start of this March series.
All right. Karan, thanks a lot for that. That's giving us a perspective on how volatility is played out since the start of this year, and like Anand highlighted, it is a regime shift. You are seeing higher volatility right from the start of this year as well, and you probably see that for some amount of time. But the silver lining to that is that you've actually seen positive rolls taking place at a higher rollover cost as well. So not to be disheartened, but the range of 10,800, which we've held pretty well. So the bulls have mustered the courage to actually guard themselves around the 10,800 mark. 10,800 to 11,000 odd is that level that we could watch out for. Kanan, thanks a lot for that.
Well, Just before we get in our guests, just want to revisit the markets once before we move any further and get in our guests. As I said, the top losers include a Wipro, which is down about 3% in trade. The oil marketing companies, as we mentioned, are the ones which have some pressure points to themselves. And if we just look at the last half an hour, if we strictly look at the last half an hour and what's done well and what's not, I think Carborundum Universal has moved into the green. It was in the red. Welspun India has extended its lead a little bit. So this is Carborundum, which is in the green. Welspun India has just extended its lead. So it was up in the green, but now trading in or around the highest point of the day, as is, I think, Mahindra CIE. What's not done well and it cracked quite strongly is Rain Industries, which has lost about 5-6% in the last 25 or 30 odd minutes. So look at that sharp, precipitous fall of Rain Industries. A similar, not a similar fall, but a fall coming in TTK Prestige as well. So that stock has corrected quite strongly in the last few minutes of trade. And then there is, I think, Blue Star or Zensar Tech. Both of those two have looked slightly wobbly. So those are 2 or 3 names that you should be monitoring in the last half an hour of trade, because they are looking like being under pressure. What's doing well, though, is cement. And at some point of time, we'll, of course, get you a sense of what the brokerage view, at least the Deutsche Bank view, was on the cement counters, because that led to stocks like Ramco Cements, for example. The southern cement company is doing well, but Ramco in particular, which was amongst the better performing stocks and has stayed put today. 2 million shares traded, 5.5% higher. The Deutsche Bank view was of positivity. The target price is much higher than the current market price. We'll talk about that. Let's first talk about the markets at large. Amar Singh, Head of Advisory at Angel Broking, with us on the show, as is Manav Chopra, Head of Equity Research at Indiabulls Ventures. Gentlemen, both of you, afternoon. Thanks so much for joining in. Manav, the last 2 sessions have seen the markets bounce back and then eventually end somewhere midway, so at the median or the average levels for the day. In today's session too, after being down, we broke into the green, currently about 0.25% lower. What do you expect the Nifty to do? Is it possible to even predict or take a call on the index right now?
Absolutely. I think the kind of the news flows, Neeraj, we are seeing, after every half an hour, there is some volatility that is coming in. So, being quite predictive with those kind of news and getting aligned with the market, I think, one has to be very lucky. But keeping that scenario in the picture, one thing that really stands out is the yesterday's lows are going to be a very short term, are going to be the benchmark for any bulls for the near term. So 10,700 for a very short term perspective are the make or break levels for a short term basis. And we did see a good buying that happened yesterday, and also from the day's lows we have seen a good amount of recovery. So we can keep that lows as an important trigger on the lower side, and one can also treat it as a positional stop loss for any of your trading bets. So as long as these lows are held, I think the bulls would still be interested, and we could see some sort of a buying still happen from the lower zone. On the upside, I think it has happened in the past, 10,950 and 11,000 are the key triggers on the upside. But if I just remove the today's trading bar, what we have also witnessed earlier was, markets are trying to form a consolidation, and within the consolidation, it's a bullish setup that is coming up. So we'll have to see how actually market pans out for next couple of trading sessions. Along with the Nifty, Bank Nifty is also near its important support levels of 26,600. So one needs to keep eyes very closely on the support levels, and if these support levels are holding, I think eventually you would see markets coming out of from support levels, and eventually would start moving on the higher zone. But I think looking at the news events, one also has to take a very calculative approach at the near-term perspective.
Gurmeet Chadha, co-founder and CEO at Complete Circle Consultants, also joins us on the show right now. Gurmeet, volatile times, how are you positioned for trade? I mean, do you rather sit on cash at this juncture?
Devina, hi. So, a bit of wait and watch. What we have seen is, pessimistic times like these, whether it's been a terror attack or events like Brexit or others, you tend to see a knee-jerk reaction in the market, which eventually turns out to be an opportunity. In this case, we are not really sure how far this will go up the escalation ladder. But looking at the market reaction so far yesterday and today, and the statements coming, looks like it may not go. I'm not a security expert though. So for the time being, one can wait and watch. One should broadly look at now the risk which were on the table 4 months back. A lot of them have receded or mitigated. So for example, the US interest rate hike, I think that looks off the table for now. I think we're in for an extended pause as per the Fed minutes. If you see the balance sheet construction and the drawdowns they were doing, there's a clear indication that also will come to a pause. The interest rate, domestically are likely to go down. And if you see the other aspects in terms of the FI, the entire trade of EM to DM, which was consequently happening because of this, seems to be ebbing out or reversing. The trade war seems to be, probably we are hopeful of some kind of an agreement being reached. So the bigger risk on the table which drive the market on a medium-term basis seems to be receding or getting mitigated. And once this knee-jerk reaction is over, I think the market will react positively. The political risk also, to a certain extent, of this government not getting a repeat term post what has happened seems to be also getting slightly reduced. So I think I'm a little more optimistic now from a medium-term perspective.
Okay, Amar Singh, if you could just get your index call first, and then we go on to your stock-specific strategies. Your index call on the Nifty and the Bank Nifty.
Yeah, looking at the way the index has been, I would say, trading for the last couple of sessions, primarily it's more of news flows which are impacting and the sentiments which are impacting. And also, if you look at the India VIX, that's increased significantally, almost close to 18.8, 19 levels. So from 12. So there is some definite uncertainty in the market, and the market earlier technically also was having very strong support around 10,580, 10,600, 620 levels. So that support zone definitely holds. Technically, looking at the charts, I had earlier also talked about the monthly charts, clearly indicating that there is a sideways consolidation in the markets. Weekly charts also reflect the same. On the daily charts, I would say that somewhere around 10,900, 950, that's a zone of resistance. So Nifty is likely to trade in that range. On the downside, I would say 10,700, 10,900, 950. That's the zone, because clearly the charts, the daily or the weekly or the monthlies, they clearly indicates a trendless market in Nifty. So if we have some major news flows, then that could have some impact on the markets. Otherwise, I would say the markets could trade sideways.
Let's take your stock calls, Amar.
Yeah. So the first one is on Vedanta. What we are seeing in Vedanta is that the stock did bounce back, managed to bounce back from almost 150 levels. Currently, it's around 170. So technically, if you look at this stock on the long-term charts, it continues to remain bearish. On the short-term charts, it has managed to bounce back, but these are levels where we'll witness profit booking and also fresh short positions being built into this stock. So one can look at selling Vedanta around 169 odd levels with a stop loss of 173 and a target of 157 on the downside. And the second stock one can look at, again, that's on the sell side, is TVS Motors. If you look at this stock on the long-term charts as well as the short-term and intermediate-term trend, the stock continues to remain bearish. It did witness some pullback, but it's not sustaining. However, it's in oversold territory, so there is a possibility of a bounce back, but any bounce back should be used as a shorting opportunity till the time we don't see a consolidation in the stock, and that doesn't seem to be happening. So TVS Motors, it's currently around 456 odd levels. So any pullback towards 460, 462, ideally that can be a good level to short with a stop loss of 472 and a target of 438 on the downside.
Manav, your stock ideas?
See, in this market, actually, looking at this scenario, we've not given any stock ideas, but even at the current levels, only for a shorter momentum, UPL is one stock which is looking quite active. It has been in a very good uptrend and has been moving in consecutive series of high tops and bottoms. So this is something that can be played, for a very short-term perspective, having an important support at 850 on the lower side, and we expect this stock to eventually go towards the levels of 885 to 890.
All right, those are some stock ideas from our technical experts. Cement as a pocket, remember, is extremely active in today's session. Like we've highlighted, there are a lot of positive brokerage calls coming in as well for the southern-based cement companies. Ramco Cements is up about 5%. You've got Prism Cement, Orion Cement, India Cements. All of them are up closer to about 4 to 6% apiece. Gurmeet, is this the turn of the page for cement makers?
Looks attractive, Devina, from a valuation perspective. Also, if you see, there's a lot of consolidation which has happened in the industry. If you see 5-6 years back, you had top 5 players accounting for only 35% of the market. Today, Ultratech alone is about 150 million ton. Let's say about a 500 million ton market. So positive on this space, and I think there have been reports of price hikes, especially in South, ranging from 30 to 40 rupees a bag, as per some of the latest reports. Some of the ideas I like in this space is Shree. Again, more a single zone. It's largely north-based with some presence in east. They have, differentiated from others both in terms of their fuel efficiency and waste management. If you see, they have done more high frequency and low magnitude kind of a capacity additions, which lead to better operating leverage. So it's a little premium right now, but that's the top pick in that space. Then ACC also looks good. I think there's a lot of cost rationalization measures they have done. The plants being a little older, they had some concern on the net cement realization, though those seems to be improving. So looks a good play considering that most stocks are either in high single digit or early double digit earning multiples.
Mm-hmm. Okay. In fact, let's keep it with that conversation. Deutsche Bank turns bullish on Ramco Cement, citing margin cycle is turning favorable in South India. Nikki Sedani, she's joining in more details on that note. Nikki.
So Ramco Cement was it went up to as much as 7.5% in trade today, though it's come off from the high point, but it still remains significantly higher. That's account of Deutsche Bank, which has gone ahead and upgraded the counter to buy from hold and hiked the target price to around 750 from previous target price of around 630. The stock is currently trading, until yesterday was trading around that 650 kind of level, which indicated a potential upside of more than 25%. It said that the Ramco Cement is preferred play on South India, followed by ACC, and the margin cycle now seems to be turning favorable in South India. Also, a dealer check that we did suggested that the companies across southern region have gone ahead and taken a price hike of as much as 50 rupee per bag, which is a huge number coming in on this month. High stress levels for South Indian capacity is expected to drive up prices. That's what the note says on cement, specifically Ramco Cements. It says that the outlook for other region remains to be subdued in near term, but then that for South remains positive over long term. Back to you guys.
4.5% up for Ramco. And the cement counters by and large have looked strong. I know Gurmeet just spoke about them. Just want to include one chart perspective out here as well. Manav, Ramco notwithstanding, Ultratech Cement the last couple of days has been rock solid. Some of the smaller names too have bounced back today, not necessarily from the south. Sanghi Cement, the last time I checked, was up and about 3-4% too. Is this space looking stronger than what it usually does?
Yes, in fact, I would agree. Cement as a pack, not only this week, but in last couple of weeks has been forming a higher base and consolidation. We've seen a good relative outperformance in both these indices, and specifically if we compare the cement stock versus the Nifty, it has seen some sort of a good momentum and at least long built up that has been witnessed. Also stocks like Grasim, which has seen a series of decline, are bouncing from its oversold levels. We've seen Ultratech already seen a very good bounce from it from below its long-term averages. So I sense in the near term, if there is a short-term pullback or these stocks come near its support levels, one can look to initiate long positions, not for a short-term trading, but for a positional longs. Ultratech has important support around the levels of 3750. So any dip close to these levels, I think it's a good trade, which also provides a high risk-reward ratio at the current levels. Ramco Cement, in fact, has been showing a good relative outperformance. In fact, there has been a good weekly and monthly breakout. If the price sustains and continues to trade above, I think the 660 levels, will not be surprised to see if cement packs would in the near term could see an outperformance, and Ramco Cement is showing pattern targets of close to 720 on the upside.
Okay, Gurmeet, now I know that you track this group very well, the Minda group. That stock is up about 10%, is now trading at the highest point of the day, 138 and counting. Not Minda Industries, but Minda Corp is the one I'm talking about, 138, up 10%. What's happening here?
So, Neeraj, obviously there was a post the buyout news came in. Also, if you see the other products, which are the sensors and others, I think there's some activation expected there. The promoters have been buying back from the market. If you see the share has gone up from about 66% to about 71%, and it got a lot of beating. I think most Minda Industries also fell from almost 450 post the split to almost 270, 280 levels. So it's a good company. Also, there's a lot of market share they are getting from other players like the Mothers and Sumis of the world. So I remain positive, but I have positioned more on at Minda Industries rather than Minda Corp. Minda Industries, also their airbags, their infotainment systems, the ABS, the alloy wheels. Some of it, the sensor plant is getting commissioned in June. So I'm pretty positive, and we discussed this earlier. While the car demand would probably grow at 8-10%, the value addition features grows at 1.4 to 1.5x. So once this auto cycle stabilizes, turns around, I think the OEMs stand to gain more.
Okay, well, watch out for these names today. Minda Industries too is about 2.5% higher in trade. Also watch out for what's happening on this PSU banking side. Now, Gurmeet, I saw this very interesting thing that you mentioned the other day about how maybe corporate-facing banks and PSU banks, because of the credit costs coming off, might be an interesting next 12 to 18 odd months. The numbers are staggering, because we can't time which quarter will they start coming in, but whenever it does, the numbers would be high. My question to you is, irrespective of the timing, what is the safest bet within this bucket to place a bet on that particular reasoning? Yeah. So on the private corporate bank side, if you see, the expectation is the credit cost will come down from 2% to 1%. The top picks there would be Axis and ICICI. If you see the top 10 accounts which are under NCLT, which are about close to 4.5 trillion, they account for almost 40-45% of the total stressed book. And 6 out of those 10 are in a very, very early, either have got resolved or they are now likely to get resolved very, very quickly, including the SR, the Bhushan Power of the world. And if you see, the provisioning is about 70-72%. And in cases like SR, there's a 90%. In some of the others, it's a 50, the average realization is about 45-50%. So if you take that number and do a broad maths, the right back could, for an Axis, let's say, for example, could anywhere range between maybe 6,000 to 8,000 crores kind of a number for these, top 10, 12 assets. I've still not done the detailed maths there, and I can come back to you on that. So private banks, Axis and ICICI, and also if you see the loan share of Axis Bank today is about 4.5%. With NBFCs still facing liquidity challenges, PSU banks still don't have the growth capital, while some of them are coming out of the PCAs. And BankX typically grows 1.5 times GDP. So 10-12% gain in market share, you could possibly see them growing at 18-20% their loan book. And if they can come closer to an ROA of about 2%, then you're talking about some 20% plus ROEs for Axis and ICICI. So top picks there. On the PSU space, SBI and BOB. Those will be the top picks.
Autos have seen a turnaround in the last few trading days. Yesterday also, while the entire market at the start of trade was red, by the end of it, one of the 3 sectors that ended in the green was autos. So Maruti now once again making its dash towards 7,000. M&M in the last 7 days has given gains of 5%. So not bad going actually for any of these. Tata Motors also, if you could have the stock up, while for its own share of problems that it has seen today, the stock is down. But last 7 days, the stock has actually moved up by 10%. So not bad going for Tata Motors after posting that mammoth loss this quarter. On the charts, Manav, M&M, Maruti, Tata Motors.
See, if you're
we can hear you, Manav.
Devina, can you please repeat it once again?
Yeah, M&M, Maruti, Tata Motors.
Yes. For the immediate basis, the important support for Maruti is close to 6,900. The prices earlier did form a double bottom pattern, and right now it is trying to form a higher base. So until unless we don't see a move above, on the immediate basis above 7,050 for Maruti, I don't sense there would be a good momentum, at least in the near-term perspective. M&M also is bouncing from its oversold levels and is facing crucial hurdles at 665 on the upside. So I would currently want to just keep both these stocks on wait and watch until unless it sees a breakout of its resistance level. We will not see any move on the immediate basis. So we need to see this breakout happen at least on the immediate basis, which levels are at least 3% from the upside. So for now, I think one can just keep it for a wait and watch, and let's see how the pattern shapes up for the near-term perspective.
Right. Amar Singh, I'd like to come to you with an L&T, a sturdy stock in many ways, fundamentally strong, but in terms of giving price moves, it's pretty much tight-ranged. Would there be a significant upside on an L&T right now from 1280 odd levels?
I would say that looking at L&T, what we are seeing is that on the long-term charts, on the monthly charts, the stock is anyway clearly displaying that the upside seems to be capped. So on the upside, I would say somewhere around 1320, 1330. Currently, it's around 1280 odd levels. And on the weekly charts, we are seeing that the stock definitely has got very strong support coming at around 1200 odd levels, with the intermediate term trend being down, while at the same time being in oversold territory. That's the reason we are seeing this consolidation in choppy trading sessions in L&T. On the daily charts, I would say there is some clear-cut indication that there is bullish divergence on the charts. So till the time the stock does not take out the 1300, 1320 level, I would say the stock is likely in for some consolidation between 1200 on the downside and 1320 on the upside.
Okay. Gurmeet, before we let you go, could you leave us with one or two picks of yours which you're pretty optimistic on?
So one pick which I'm optimistic on is PI Industries. I think it's a steady mix of both agrochemicals and CRM, which is contract manufacturing and custom synthesis. Agrochemicals, they are largely into plant nutrients, hybrids, seeds, specialty fertilizers and all, which seems to be doing well. The product mix is also improving. On the CRAMS bit, they basically are into custom research and contract manufacturing of some fine chemicals, which are into which have applications both in agriculture, pharmaceutical, and electronics. They have a good order book. It's almost about 1.2, 1.3 billion. Our sense is they can generate free cash flows of about close to 15 to 17 billion, which can take care of the internal accruals, can take care of the annual capex, which will be around 2.5 to 3 billion annually. Also, their operating margins have improved on background of this better product mix they have. So it's a good play there. So that's one pick. And also, we've already discussed some corporate facing banks, which is Axis and ICICIs of the world, which I think could substantially outperform even in the short to medium term.
Okay, we'll let you go on that note, Gurmeet. Thank you so very much for joining in this afternoon. Gurmeet Chadha there of Complete Circle Consultants. Well, moving on, corporate-facing banks are bound to see an uptick, but that's due to the cyclical nature of the business, says India head at Nomura Prabhatavasti. The rope for retail banks are longer, he says, provided they get the mix right. I started off by asking him about what he makes out of the liquidity scare that gripped Indian equities starting late last year, and here's his answer.
As long as the systemic risk can be contained, I think that is the key, because we have, frankly, if you look at the size of the problem compared to the size of the banking NPA problem, it's a smaller problem, right? Because the banking NPAs in absolute aggregate amount that got recognized over 2-3 years are multiples of what we have seen in the current NBFC sort of fear that we saw. So I think the problem with the NBFC issue simply is that the lenders to NBFC, especially mutual funds, have to recognize a problem right away on NAV, and therefore their ability to take defaults is comparatively lower, because outflows start to happen immediately, NAV goes down, and that exacerbates the crisis. Unlike banks, which can sort of have capital and can take those risks. So it was essentially it's a sentiment liquidity issue in some sense, which deepens the problem. So as long as the support from financial regulators and secondly government, and thirdly I think if we can sort of manage the system-wide issues from happening, then I think even if there are 1 or 2 companies which face issues in the in the second half, we should be okay. Because as I said, the size of the problem is not large. It's the nature of the problem, because it's funded, a lot of these NBFCs are funded by mutual funds. And if they don't lend to them, then they'll have to basically, these guys just cannot do anything, because that source of fund completely gone. And whatever problem the balance sheet get amplified. There's just no grease in the system. But my overall assessment is I think we should be fine. I mean, that's the call I would take, because, as I said, I think macro liquidity will get better. I think the regulators seem to be committed to sort of generally sort out the issues. And I think save a shock, for example, it could be election shock, or it could be anything, frankly, save a shock, and shocks can still come. We should likely scrape through with sort of an orderly wind down of this problem.
While obviously you say that about the NBFCs, the thought now has shifted to banks which have a bigger retail book as compared to a corporate lending book. Earlier on, it was more the heavier the corporate lending book, the corporate-facing banks, they're the preferred bet. But now, slowly but steadily, because of the risk aversion that's there, a bank which has a larger retail book seems to be garnering favor. Is that a mindset that you would also agree to?
You mean to say the risk on retail books are higher? Is that the question that you're asking?
Yeah.
Well, I don't think so, and simply because of the fact that I think the thing is that the nature of lending in retail and the safeguards around it have gone up. And I would say that the infrastructure around retail lending, be it credit bureaus, the information sharing, etc., make sure that if you really are defaulting, then your access to credit gets stopped completely. So I think it's a very, very different proposition. That's something that is now being brought into corporate world, right? And for example, evergreening, etc., was much more easy earlier in corporate world, not really in retail world, and therefore I think credit behavior in retail has been better. So, so the first thing I would say on retail is that you must recognize that retail lending to GDP ratio in India is comparatively small, actually very small compared to all the economies of our size, and even our neighboring economies or global economies, etc. So we are not heavily levered in retail. There has been a lot of growth in retail, but that doesn't mean that your sort of your overall retail lending is too heavy. Second, I think, as I said, the systems are and the overall ecosystem of retail lending is very strong. So I think there might be a slowdown, mind you, because of the fact that there is some amount of slowdown that's happening on the consumption space. There might be incremental slowdown, but I don't think it'll be a systemic problem of the sort, given the fact that I think, as I said, ecosystem of retail lending is, I think, very, very strong.
So would you prefer corporate-facing banks or banks having a bigger retail book at this juncture?
Again, no good answer, no one good answer to that. I think there's a cycle. So retail actually, if you look at last, 10 years, retail really had not seen a cycle. I think it'll probably see a slowdown, but not an NPA cycle of the sort we saw in corporate lending. Corporate lending obviously is going to see a cyclical pickup, and it has sort of seen the worst days of NPA problems. So there will be a pickup there simply because of the fact that you've essentially written off that what you had to write off, and the economy is at the margin picking up slightly. The investment cycle, to whatever extent, got destroyed. There's a marginal pickup, not a whole lot, but definitely on the mend slowly. So therefore, the growth prospects and the NPA prospects of corporate banks have gotten better. That doesn't mean fundamentally the nature of corporate lending is not still risky. It is still risky, but it's just that you're right part of the cycle right now, and you might therefore see higher growth in profits. But if you really look at there were banks which are pure retail, there were banks which are pure corporate. I think it has become a bit of hybrid right now because the corporate banks have gone to retail and retail banks have gone somewhat into corporate. But likely scenario is that the corporate heavy banks will probably see a better scene simply because their valuations have come down and they are on the right side of the cycle. So you're looking at next 3-4 years, it's quite possible they might do better simply because it's cheaper and they are going to not have the same problems they had in the past, and therefore it will be able to grow reasonably well. There will be rising ROE trend, etc. overall. So I think in that sense, over the next few years, it's quite possible that you might see slightly better performance simply because valuations go up.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
About 27 minutes left to go for market shutdown. So we've got about 0.25% losses coming in on the index, but nothing to worry about yet. So this could be any normal day trade. 10,810 for the Nifty. The bank's looking slightly more weaker. So the bank Nifty trading about 0.5% under this afternoon. Taking a look at what's happening across the globe, Europe as a pocket, and to see what their trades look like there. So there is eminent weakness out there, which probably could see a some more pressure building out for our indices, about more than 0.5% for the FTSE 100 as well as the DAX. Coming to the turnover picture, you will be seeing that being slightly higher as it is the last day before we step into the expiry day tomorrow. 13.7 lakh crores on the futures and options side already, so you are seeing a pickup of momentum there. Cash market volumes also on the higher side, 30,000 odd crores already traded. Half an hour left to go, could expect this number to be somewhere closer to 34,000 odd. Rain Industries, just pull up that stock. It just reported its numbers, and there's a net loss of 139 crores versus a net profit last time of about 320 odd crores. So that is clearly not going down too well with the markets, and the stock has been battered out of shape. Remember, this is a stock which actually over the last few trading sessions had been continuously gaining ahead of these numbers, and now once we've got these reported numbers looking the way they are, it's a big disappointment, and the stock has really been beaten out of shape. 10 odd percent under. That's the EBITDA, which too has fallen significantly. 82% drop in EBITDA. Margins getting squeezed heavily from 21.9% to about 3.4%.
That's a disappointing quarter for sure, and it's showing in the stock. Just before we get to Fab4, the flashes from ANI, remember that the NOTAM has been withdrawn and freight operations will resume. This is coming in from the ANI. I believe it's come on some other wires as well, but we will leave it at that. We haven't called up and independently verified this piece of news, but apparently this has happened. And flight operations will resume shortly. Okay, like we said at the start of the show, that this could have been any other day, and therefore on any other day, Yash Upadhyay manages to find a list of 4 stocks that make it to the Fab 4 stocks of the day. Let's get him in today's session as well. Yash, good afternoon, and what's made it to your list?
Good afternoon, Neeraj. So a lot of stocks actually are in the green. It's actually divided on the Nifty 500 almost 2 gainers for 3 losers. Starting with the first stock on my Fab4 list, Allahabad Bank, and most of the PSU banks are also buzzing in trade. This one in particular is up about 7.5–8% today after the Reserve Bank of India lifted the restriction in terms of lending after the lender has moved out of the prompt corrective action framework. Cement stocks are buzzing in trade. India Cements being one of them, up close to 4%. Multiple brokerage reports citing an increase in cement prices led by the southern region, especially seeing sharp rise in cement prices by as much as 40 rupees per bag. So watch out for them as well. Bharat Dynamics, by virtue of its move today, is the top gainer on the Nifty 500, up close to 15.5%. So watch out for that and some of the other defense PSU names as well. And the last stock that I want to highlight is IRB Infra, up 4%. Again, on the back of very heavy volumes and a short covering seen in the counter. We've seen open interest come off by about 7%. So keep an eye out for IRB Infra as well.
All right, Yash, thanks very much for that. A slight nudge up in the volatility, now up closer to 9.7% on the India VIX from about 7% that we were at the start of the trading, at the start of the show. 18.8 is where we're trading at. Siddharth Sedani, Vice President for Equity Advisory at Anand Rathi, he's joining us on the show right now. Siddharth, what's the approach to the markets now?
Good afternoon. Well, markets are definitely very volatile on the back of, geopolitical tensions which are going on between India and Pakistan. I think if this escalates further, there would be further nervousness which will be seen in the markets. However, I would say it's a good way to look at these situations, that we have elections in front of us in maybe a couple of months from now. Geopolitical tensions. So most of the negative news, or you can say the news which can create volatility in the markets, are there in the markets as of now together. So I would say any situation comes by, I think that would be a great opportunity, but you have to be very selective in terms of stocks, because you cannot pick up any and every stock right now. You have to be stick your neck out and stay with the blue chips, large caps, and leaders of those space.
That stock has gone up quite substantially. MERCK, Merck India, I think they've announced some dividend, a special dividend that because of some business transfer gains that had. And look at that stock, look at the volumes there too. Still up about 8%, off the highs of the day, but still up about 8% in today's session. So do watch out for Merck India. A large dividend, people love dividend plays, so those companies seem to be doing okay. Siddharth, what's happening with Bharti Infratel? The last few days it's been under some serious pressure.
Well, although this entire space has been seeing a lot of capitulation as well as consolidation is up next, because there are a lot of tower businesses. Maybe the rental businesses are also are anticipated to come down. Overall perspective in the entire space, we don't like any of the company, neither we are recommending any of the service provider also. Only the stock which we like a bit is Sterlite Technology on the back of optic fiber network expansion, and we know that 5G rollout is around the corner, maybe next year. So Sterlite Technology is the only space which we are liking. In fact, Sterlite has also seen a lot of pressure in it because of higher pledge shares. But however, once the things are done with, I think Sterlite fundamentally, because of the highest order book as of now, looks quite interesting. Bharti Infratel, or Bharti for that matter, and any other telecom service providers, we are not bullish on.
Well, but they're all looking under pressure. Amar Singh, look the charts of a stock like Bharti Infratel, or even for that matter Sterlite Tech, which had a rebound from those 210 levels and is under a little bit of pressure the last couple of days. How do they look?
I would say, looking at Bharti Infratel, what we see is that if you look at the long-term trend, the stock has been correcting significantly from almost 480, then it came down to 240, bounced back to 340, again corrected to 300 levels. So what we are seeing on the long-term charts is the stock was moving from oversold territory. It did manage to move up, but sustaining at higher levels is definitely difficult, because for Bharti Infratel, I would say 330, 335, that was the crucial zone of resistance. And from there, the stock has corrected. So I would say there is a possibility that the stock could, because the stock has got very strong support coming at around 280, 85 zone, because that was the level somewhere in January, the last week. So that's the level of support for the stock. So ideally, the stock should find some support there, but upside seems to be definitely capped. And 330, 35 that the stock had made, I don't see that crossing in the immediate future.
Okay. Manav, any of the PSU banks which are up and about today and have stayed strong throughout the trading day, would any of them, the mid-sized ones, make it to your list of trades?
Yes, in fact, if you're just looking at the filters, the price breakout with the volumes are definitely looking quite attractive in PSUs like Canara Bank and even Allahabad Bank. But Allahabad Bank specifically stands out because on the weekly chart perspective, it has formed an inverse head and shoulder pattern. And Neeraj, after such a formation, we usually see a potential upside of at least 15-20% from the current levels. Looking at the overall scenario and the volatility that is there in the market, I sense, 45, 46 are the important support levels. So a strict stop loss can be maintained in such a scenario, but it still has a very good risk reward. Will not be surprised to see, in case if there is a breakout and if the prices sustain above 48.50 on the upside, you could see rally towards 55 and 58.
UPL is the other one, that has been a constant favorite right now. Over the last few days, this last 7 days performance of the stock 6% higher. 1 month, the stock's gained about 15.5%. 6 months, the stock's put on 32%. So it's a really big stellar move coming in from UPL. If we get in the ANR function of the Bloomberg, it will tell you the analyst reviews on the counter, and which is much more positive for UPL. Target prices are also on the higher side, and a majority of the analysts on the Bloomberg consensus have actually gone ahead and 90% odd, I believe. That would be the number of 90% of the Bloomberg estimate suggesting a buy on the stock. But remember, return potential seems to be a little low because the stock has already run up quite significantly. So we're going to closely watch out for that. Siddharth, Sedani, do you track UPL?
Yes, in fact, in the agrochemical space, the last quarter which they posted numbers, that was also very good. Margins expanded. And I would still say that the international business has been really growing good compared to the domestic side of the business. And the recent acquisition which they have done of around $4.5 billion, I think Arista, I think this acquisition also will be reaping fruits once the synergies work out well. Although this is EPS accretive deal, but it would be around $3 billion debt which the company will be raising. I think that will create a little bit of a pressure, but yes, quite a bit upside has been already taken place in UPL. Little more, maybe 50-100 rupees further from here. But overall perspective, it's a great company to be in. It's into agrochemical space, and we believe this company has a positive signs of results which is coming up in coming quarters also.
Okay, that's UPL at 870 right now. Pulling up, what is Z Entertainment is doing today, because yesterday's session was a definite, a promising move on the counter, and all of these related companies, Z Learn, Z Media, all of them did well. 463 in the last 1 month itself. Z has managed to prop up 50% of the lost ground, since the issues came to light. 45% higher in the last 1 month. Manav, Chopra, would you take a trading call on Z?
See, yes, in fact, the stock has a very important support at 440 on the lower side, and it has already seen a very good rally, like you mentioned, from its recent lows of 290 or 50% markup from its recent lows. I recommend that one can just wait and watch into the stock in case if you see a dip towards the levels of 440, 435 on the lower side is when you can look to initiate long positions, because the overall parameters have already entered into an overbought territory, and it's facing resistance of important long-term averages. So any short-term dip is when you can look to enter. I think the support of 435, 440 would hold on the immediate basis, and eventually that would give us a good risk-reward ratio. A stop loss of 425 on the positional basis is recommended into the stock.
Should pull up an info edge. The stock is currently trading at 1800 odd. Today's session is looking stronger, and in the last few minutes the stock has seen a big spike coming in there. So about 4% higher, and this one actually is very close to its 52-week high of 1,819. So just 9 points away from making, 10 points away rather, from making a new 52-week high. Just comment on, this stock in particular, Siddharth, if you track it at all.
Devina, if you can just repeat the stock.
Info Edge. It's at 1800.
No, we don't cover Info Edge. In fact, in the entire space, companies like Just Dial or Info Edge, we are not constructive over these because there are a lot of variable factors which is associated with it. In fact, we like some of the mid-cap IT plays, and IT is definitely in the momentum as of now. And looking at the volatile situation, geopolitical tensions, elections, I think safe harbor sectors like FMCG, IT, pharma, these sectors will be which investors will be betting on mostly. So mid-cap IT we like, and out of that L&T technology also will be one of the plays which we would like to play on.
All right, Amar, near the 52-week highs, Info Edge, would it be a risky bet?
I would say looking at the long-term charts, the stock seems to be poised for a breakout. And also, as you rightly mentioned, it's in a very strong zone, 1780, 1790 earlier. That was a crucial zone of resistance. And for the last 2 days, the stock has rallied from almost 1630 levels to 1800. So I would definitely wait and wait for the stock to pause, because this sort of rally sustaining seems quite difficult for the stock to sustain this sort of momentum. So rather, I would wait for the stock for any decent correction. A good level of support on the downside is around 1750, 1760. Ideally, any correction towards those levels can be used as a buying opportunity, because in that case, the stop loss needs to be below 1710. And the stock has an upward potential of rallying towards 1880.
Okay, let's get in some closing strategies from both our technical experts. Manav, let's start off with you first.
Yes, my first call would be a buy on TCS. We have already seen a good momentum rally in last couple of trading sessions, and in such markets, we expect IT to be a sector which could be some sort of a bellwether, and the stock has been trading above its long-term averages. One can buy this for a BTST for a stop of 2040 for an upside target of 2095.
Amar Singh?
Yeah, one can look at IndusInd Bank. IndusInd Bank, we've seen the stock correct significantly. And from almost, if you look at the last few weeks, The stock has been on a relentless downside, but the stock seems to be forming a bottom, and there is bullish divergence on the charts. Currently, it's around 1477, 78 levels. So any dip towards 1470 ideally can be used as a buying opportunity with a stop loss below 1430 and a target of 1540 on the upside.
Okay, watch out for those names. While we await for some official verdicts or words that come in from the Indian government side as well. Last 12 minutes of trade left, so important 12 minutes too. The markets are not correcting too much. Lakshmi Vilas Bank is the one that is really shot up in trade, so do watch out for that one. What's corrected big time is Max India though. The valuation at which the deal was done was probably something that didn't please too many people. Siddharth, Sedani, any thoughts on Max? Okay, we'll have to cut across to the MEA briefing. It's started.
Media briefing. I am joined by Air Vice Marshal RGK Kapoor. I will read out a prepared statement on recent developments on India-Pakistan front. We will not take any questions after my statement. India had informed about counter-terrorism action it took yesterday against a terrorist training camp of Jaish-e-Mohammed in Pakistan, based on credible evidence that Jaish-e-Mohammed intended to launch more attacks. Against this counter-terrorism action, Pakistan has responded this morning by using its Air Force to target military installations on the Indian side. Due to our high state of readiness and alertness, Pakistan's attempts were foiled successfully. The Pakistan Air Force was detected and the Indian Air Force responded instantly. In that aerial engagement, one Pakistan Air Force fighter aircraft was shot down by a MiG-21 Bison of the Indian Air Force. The Pakistani aircraft was seen by ground forces falling from the sky on the Pakistan side. In this engagement, we have unfortunately lost one MiG-21. The pilot is missing in action. Pakistan has claimed that he is in their custody. We are ascertaining the facts. Thank you very much. That concludes the briefing. We are, Sachin, we are not taking any questions. If we have more information, we will share that with you. Thank you.
Yeah, this is the Indian response, and the official response is that there is a MiG-21 airplane which we lost, and the Indian pilot is missing in action. The Indian authorities are trying to ascertain the claims by the Pakistani side about the pilot being in their custody. It's a short, terse statement, no indications and none otherwise expected about what future course of action is. One Pakistan fighter aircraft was shot down from the Indian side as well. But yes, one Indian pilot missing in action. Okay, 9 minutes of trade left. Let's try and stick to the markets. Nothing market moving as of now, so let's try and stick to the markets. Last 9 minutes of trade left. 10,805 for the Nifty. We've gotten in closing strategies from our experts. Maybe try and get in a thought on what the index strategy could be as well in a scenario like this. Manav, Chopra, tomorrow is expiry for the March series. Would you use options in order to trade the index?
Honestly, Neeraj, it's a very difficult bet to take at the current levels. You know, the support of 10,700 Nifty on the spot is very, very important. So unless that is not breached, it's very difficult to anticipate any downside. But yes, for an immediate basis, we can definitely claim that, you know, 10,950 to 11,000 would be a very, very stiff resistance on the upside. So we don't expect the Nifty to really expire above 10,950 on the immediate basis. But keeping that picture in mind, you know, I don't really expect any immediate sort of a run-up on either side of the markets. And, you know, tomorrow expiry could be overall be range bound, whereby you could be expiring between 10,750 to 900 on the upside. So it's going to be a very tight consolidation range. So anyone who would be an option seller would be just selling call on the upside, and that would be the strategy. But as of now, I think there is nothing like a trending move for someone to recommend for.
Okay, GVK Power and Infra, stock that has done well ahead of the news of Adani picking up stake in the Mumbai airport. Today gives up a bit, some profit taking in the counter, but just see the last 5 trading sessions and you'll know the kind of excitement that the stock has actually witnessed. About 40% higher on the counter, 36 to 40% in the last 7 days for GVK Power Infra. A small stock, Amar Singh, GVK Power Infra, 7.25 rupees. Is there a bigger potential?
I would say that looking at the stock on the weekly charts clearly shows that the stock has been definitely of interest, because if you look at the volumes also on the stock for the last couple of weeks, the volume has shot up significantly. And the stock seems to have formed a bottom. However, if you look at the long-term charts, clearly shows that on the upside towards 8.59 levels, those are resistance levels where the stock could run into some sort of resistance. But the trend, the downtrend, which was earlier persisting, that seems to have changed. And the stock seems to have formed a very strong support. Whereas on the downside, 6.5 is a very crucial level of support. So I would say that's it for the stock.
That's GVK Power and Infra. The other one that would like to talk about is, Max India. And today's session was down about 12-13%. Is there more downside open for a further short? Manav, I'll come to you with this one.
Actually, the stock has been in a major downtrend, since quite some time. The prices have been forming a series of lower tops and bottoms, and since last year April, since past 2 years, it has not seen any good decisive move on the upside. I sense on the immediate basis, since there is a breakdown which has taken place on the daily and the weekly charts, the prices sustains and closed below 74 to 75 levels, you will eventually see a retest of its recent lows, which gives us a price target of close to 60-65. So someone who's holding on the position should definitely look to exit. And there is so far no any bullish setup for anyone to look for buying or doing bottom fishing. So as of now, it's definitely an avoid for a long-term position.
Okay, so that's the verdict. By the way, just as we get ready to wind down trade, the stock that's really gotten beaten down is Bharti Infratel, down about 4%. Ultratech Cement up about 2.5%, so that's doing okay. But it's really the losers which are at the center of it all. 3.5-4%, ending at the lowest point of the day. At the broader end of the spectrum, Max India, as we said, down about 13%. Actually, we were trying to discuss that with Siddharth before we wrap. Thank him. Siddharth, Sedani, do you guys track Max India? Did you look at the deal and the valuations?
No, Neeraj, we don't track Max India.
Okay. Fair call. Siddharth, we'll leave it at that. Thanks so much for... Okay, maybe you track Rain Industries, do you?
Thank you. No, we don't track Rain Industry, but overall perspective, I think the kind of business model it has and the unique products which they have in terms of the entire space, because if I would put across the other peer group companies, which is not similar to the product line which Rain Industry has, but somewhat likes of Graphite or HEG, Rain Industry, if we talk about other companies of the same space, all the companies were looking at margin contraction in last 2-3 quarters, which I believe is more or less done with. Going ahead, I think there would be a better place in terms of their results are concerned. Margins already, the input costs have been already been out, and it is the lower prices have been gone out. So overall perspective, we still believe that a better future can be seen and the better performance can be seen for these companies in coming 2 quarters is concerned.
Okay, Siddharth, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Really appreciate your time. Just one quick thought here before we wrap up. Amar Singh, a quick 30 seconds. Any thoughts on a Max India or a VIP Industries which has corrected about 3% today?
I would say, talking about Max India, we definitely see a sharp correction today. The stock did consolidate and had bounced back to as high as 88, 89 levels. But if you look at the stock from a long-term perspective, the downtrend definitely still remains. So this was a temporary respite. On the downside, if the stock takes out, I would say 68 levels, then the stock has a potential to retest its lows of 60. And looking at VIP industries, which you just mentioned, so VIP industries also, if you look at the stock has been correcting. However, the long-term charts for VIP industries continues to remain strong. But the intermediate and the short-term trends are clearly down. That's the reason you're seeing this sell-off. And on the downside, I would say the stock, if you look at the stock, the lows which it had made in October, somewhere around those levels, that's around 370. So those are the levels where the stock could retest and find some support. So I would say the stock could consolidate, and on the upside, the stock has resistance around 430 levels.
Okay, Jaiman, stay on. We'll take it closing thoughts from you. But these other markets are shutting shop. A slightly somber note, about 1/3% lower for the Nifty. The Nifty Bank about 160 odd points lower in trade. It's not pretty close off the lows of the day, but certainly not trading at the highest point of the day either. Substantially off from the high point of the day. The mid caps and the small caps, well, ending in the green right now, so that's good news. Let's wait and watch if this continues. The mid-cap index in particular, about 1/3% was fairly resilient in trade yesterday. What about specific stocks? Let me talk about the large caps first, and let's see what's moved and what's not. So on the gaining side, Bharti Airtel 2.5%, Ultratech has had gains about 2.4%, L&T about 1.5%, Bajaj Auto, Sun Pharma, Axis Bank are amongst the gainers. The losers include a Bharti Infra, which has been down throughout the trading day today and is looking soft. Wipro, another cut for that one. Stocks like Vedanta, fundamental space have corrected. HUL down about 2%, Titan about a couple of percentage points. So certainly consumption has come under a bit of stress in the session, and Z, which clocked in some stratospheric gains over the last few days, down about 1.5%. Devina, what are you spotting at the mid-cap end?
Well, like you highlighted, the session this afternoon has not been all that bad for the mid-caps and the small caps. In fact, to the contrary, you've actually seen some gains in the mid-cap space. I want to highlight a few larger gains coming in there. That's the mid-cap index for you, 1/3% higher this afternoon. But the PSU banks, that's where all the action was in today's session, on the back of the three banks coming out of the PCA, namely Dhanlakshmi Bank, Allahabad Bank and Corporation Bank. These three stocks. Aside from that, you had a Lakshmi Vilas Bank doing well. You had the likes of an IOB, the rest of the pack as well, Canara Bank, everything, you name it, and they've got heavy gains in today's session. Moving away from banks, you had a stock like Linde India doing well, double-digit gains. Minda Corp closer to 10% higher on the counter. Info Edge, the last 10-15 minutes of trade was particularly exciting for the counter, nearing its 52-week high of 1,819. Ramco Cement, CG Consumer, these were a few other names that did okay for themselves in today's session. Amongst the bigger losers, Max India on the stake sale, 51% stake sale in Max Bhopal Life Insurance, not doing all that good. So about 13% lowest point of the day. Market's not liking in the valuations. Rain India reported its numbers, a loss this time of 139 crores, margins dipping from 21% to 3.5%. A definite disappointment, bringing the stock down 10%. GVK Power, some profit taking. The stock has been up on a tear since the last few days. Some money off the table on that counter. Reliance Infrastructure, VIP Industry, Edelweiss, Tech Solutions, these were some of the names that buckled in trade today. Aside from that, it looked like a pretty ordinary day of trade, sans the volatility factor, which obviously was the bigger play in today's session.
Yeah, and emotions aside, keep in mind the world markets are not looking all that great either, as Devina highlighted at about 3. You pull up what European markets are doing currently as well. They are in the red. So the world markets are not a pretty place to be in as well currently. About 0.75% for FTSE and DAX, and CAC about 1/3% too. The Dow future should come up on your screen. Yesterday was a very dull day. For today's session, looks like they start off about 1/3% lower. So we'll not have too much, from the looks of it, we'll not have too much support in trade tomorrow. But
let's take a look at the contributors though, and what the index did on the back of HDFC Bank losing 10 points, Infosys, Kotak Mahindra Bank and HUL. Heavyweights there. putting pressure on the index. L&T though did fairly okay, once again approaching 1300. TCS, Reliance Industries just about holding its head up high.
Yeah, the turnover should have picked up, maybe higher than yesterday, the cash market, 33,000. So yeah, almost in line with yesterday's turnover. But the effect on turnover is certainly much, much higher than yesterday's turnover as well.
And you will be seeing a bigger number in tomorrow's session as well. 14.7 lakh crores on the F&O side. But the advanced decline ratio, that will give you a better snapshot of how the trade shaped up the entire day. Started off really strong, and then the collapse of the indices brought it right back down, and quite a few crisscrosses through the second half of trade. Finally, just a pip over by the bears in the dying moments of trade.
So interesting day of trade. Let's see what happens over the course of the next few days. Tomorrow's expiry, so should be interesting. But final thoughts from our experts, therefore, on that. Manav, I'll come to you. How do you expect the expiry to shape up tomorrow?
See, I think the markets are going to be volatile, and I don't see any big trending action on the upside, at least on the expiry day. The only thing to watch out is the 10,700 support levels for the markets. If that gives away, I think that could be the early trigger whereby the markets could see some sort of an panic, at least on the downside. So as long as 10,700 holds, I sense the upside is capped. We could just linger around the same levels of 10,800 and 850 and could expire in this broader 50-60 point range.
Amar Singh, your closing thoughts?
Yeah, I would say that the way the markets have been trading for the last couple of days clearly reflects that Nifty seems to be heading for a range-bound trade, and 10,720 on the downside and 10,920 on the upside. So that's the range which Nifty is likely to trade tomorrow.
Got that. We leave it at that, gentlemen. Appreciate you taking out the time this afternoon. Manav, Chopra and Amar Singh there with their thoughts on the platform. Well, with that, it's a wrap to this edition of Countdown. Hopefully tomorrow turns out to be a better day, but let's wait and watch. Thanks for watching from Neeraj, myself and the entire team that's put this show together. Coming up next is the F&O Wrap.